Alright, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Alright, before we start, just want to make sure you guys can hear me loud and clear, and you should be looking at the first slide of today's presentation, which should be showing IC Markets webinar live analysis session for September. All right, and for those who may have missed this morning's pre-market live analysis session, do take note that video is already up on YouTube, and this is the link for it here. So feel free to scroll on over to this page and view through it after this webinar, as the pre-market analysis covers the daily technical analysis for most of the major pairs. All right. Okay. Right. I think we are good to go. All right. We'll just as usual. We'll start off with the disclaimer. Just make sure my mic is good. Just want to make sure test. Yeah, I think. Yep. Yeah, I think mic is good. All right. Alrighty then. Okay, let's get on with the disclaimer. Alright. Do take note that this is a marketing communication. It does not and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. The analysis contained herein does not constitute a personal recommendation and does not consider your personal investment objectives, investment strategies, financial situation, or needs. Also, do take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital and should only trade with money you can afford to lose. As usual, our trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. Alright, hi Bob. Glad you've tuned in today as well. Do take note, we've dropped the link as well for this morning's pre-market live analysis session. And before we start things off, just want to make sure all of you can hear me loud and clear. Right, okay, so my name is Ketan Rameshchandra. I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where Everest Fortune Group has been a finalist for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Alright, hi Kyati, good to see you as well. Alright, just before we dive in, right, okay, you can hear loud and clear. Alright, thanks Samuel, great to see you again as well. Okay, so we've had quite a eventful week, eventful news calendar last week with a lot of jobs data, labor market data, and inflation from the US. This week we've got two central bank statements coming up. The Reserve Bank of Australia on 5th of September tomorrow, and the Bank of Canada on 6th of September on Wednesday. And also we have the weekly unemployment claims being released again on 7th September. Alright, let's see what can we expect from the RBA going into tomorrow's meeting. Right, just to get a quick update on what they've been doing in the past. So for the last two meetings, which took place on 5th July and 2nd of August, the RBA kept their cash rate on hold at 4.1%, and it's quite likely at tomorrow's meeting they're going to do the same. It's very likely they're going to hold interest rates at 4.1% once more, partly due to the steady fall in inflation in Australia. So this is the Australia monthly CPI data. As you can see, the blue line peaked in about end of last year at about 8.4%, I believe, and has been trending lower ever since. And with inflation seems to be trending lower over time, it's quite likely the Reserve Bank of Australia is going to keep their cash rate on hold once more again. Alright, so it's at 4.1%, and it's quite likely they are going to do so, keep it on hold again tomorrow. Right, and do look out for their statement as well. If the statement is relatively neutral, then we can expect further pressure on the Australian dollar together with the hold on interest rates as well. So the combination of them not raising interest rates and a neutral statement is likely to put pressure on the Australian dollar, and it might drop further tomorrow. All right, moving on to Canada, or with the Bank of Canada rather. Right, so their overnight rate or cash rate currently sits at 5%, and similarly to Australia, inflation has been actually falling quite steadily since the middle of 2022, but the latest reading actually ticked higher, right? So now this might be a wake up call for the governor at the Bank of Canada. So maybe is this uptick in recent inflation going to push them towards another rate hike, or are they willing to hold interest rates steady again? So this decision seems a bit open. Not is not as straightforward as what we can probably can expect with the RBA. So for this, do watch out. They may raise interest rates again. We can always go to Forex Factory and see what is market expectations. Let's just head on over to Forex Factory and see what is the current market expectations with regards to these two central bank statements. All right, so here we are. I am on Forex Factory. I'm on GMT time, right? So do take note. Um, Tomorrow at 4:30 a.m. GMT, Australia will release their cash rate statement. So as you can see, the expectation of the forecast is set at 4.1%. So there's very likely they're going to keep rates on hold. And for Canada, it looks the same as well. Okay. So although inflation ticked up higher in the most recent reading, it does seem like the Bank of Canada is willing to be patient and looks like they might keep rates on hold again. Right. So the combination of these two central banks keeping rates on hold, and if their statements or the press conference turns out to be relatively neutral, we can expect the Canadian dollar to come under pressure. So that means dollar CAD could rise, and of course we can expect and for the Australian dollar, we can expect Aussie dollar to fall. All right. Since we're on Forex Factory, these are some of the main key economic events to look out for this week. We also have the unemployment claims as we've mentioned earlier. Then we've also got employment change and unemployment rate out of Canada. So this is the equivalent of their NFPs, the Canadian NFPs. We also have some ISM services PMI data coming out for the US. We've also got Caixin services PMI coming out for China. This is going to be pretty important as well, especially for crude oil prices, right? So if we see an uptick in services PMI or even manufacturing PMI for China, this could signal increased demand for crude oil and other energy commodities as well. Right. Okay. So let's see if there's anything else on the. Okay. So we'll just right. So just end off with unemployment claims before we dive into the charts on TradingView. So as you can see, unemployment claims are released on a weekly basis in the US. So what it means is this is tracks the number of people in the US who are filing for unemployment benefits. So if this number is coming in higher than the forecast, it means there are more people filing for benefits. So that means the labor market is starting to slow down. So that should indicate to the Fed that they should start to become less hawkish. So this is generally should act as a negative catalyst for the dollar index. But if the numbers come in lower than the forecast, as what has happened over the last 2 weeks, this means that there are less people filing for unemployment benefits, so this usually acts as a bullish catalyst for the dollar index. So do take note of how to interpret this data event, and because it can have a pretty volatile impact on markets on Thursday. All right, hi Carraro, welcome. All right, welcome to today's webinar. All right, okay, so now we're going to dive straight into trading view. So if you managed to catch this morning's webinar, which was on the pre-market analysis, we covered the analysis on the daily time frame. So I'm just going to put this in the live chat box as well, so you can head on over to this site and watch it after this webinar if you have missed it this morning. Right, okay. So now we're going to cover. We're going to do the analysis on the 4-hour time frame, and we're going to look for more actionable levels that can help us over the next 12 to 16 hours. All right, great. Okay, Here I am on the chart for the dollar index. Currently I'm on the daily time frame. So these were some of the levels that were identified earlier this morning. All right, so okay, let's just zoom in onto the 4-hour time frame and see where the more actionable levels. And okay, before we do that, we can see dollar index actually starting to pull back today. Right, we can see that this level here between 104.30 and 104.63 does seems to be a pretty strong resistance zone. You could say that dollar index is making a double top now as we speak. It topped on 25th August and again it topped last week as well for September. So this does look like it's a pretty strong resistance zone where we can expect dollar index to uh, perhaps continue to pull back a little bit more. All right, so I'm just going to highlight this zone here. Extended red. All right, okay. Now, okay, since we've seen what dollar index is currently doing today, so let's zoom in into the 4-hour time frame. All right, okay. So on the daily time frame, we had identified this intermediate support at 103.58. Let's just see if there's any more actionable levels that we can use. We do see a nice overlap here at this level, which is at 103.92, and it also lines up well with this pullback level here. Right, so we can see generally that I think for the 4-hour time frame, this level at 103.93 should act as a pretty significant first support level. We see price making a significant swing high here on 23rd of August, finding a little bit of support here on 28th of August. Then, of course, if we go back to end of May and early June, we can see price bouncing off this level a few times as well. So I think at least on the 4-hour time frame, in terms of a more actionable first support level, 103.93 is a good level to identify. And of course, I think what was identified as an intermediate support on the daily time frame can be used as the second support level. Right, we can see once again price making a significant swing here on 6th of July, running into resistance on mid August, and then after it broke through, found a little bit of support and resistance as well. All right. So for the 4-hour time frame, for the dollar index, these are the support levels that we've identified: 103.93 at first support and 103.58 at the second support. And of course, we can see price is still continuing to trade within this bullish channel, right? We can see price trading within this bullish channel, and we do see that if price should find some major support for dollar index at about 103.93. Okay, right. Now, what about resistance? Okay, as you can see, the first resistance at 104.65 is a pretty good level as well. I think for the 4-hour time frame, since price is currently pulling back as we speak, I think this level here as the first, we can just take the swing high, right? This recent swing high as the first resistance, right? And also, if you scroll back, zoom out a little bit, we see there is a pretty decent overlap level as well. But I think taking the recent swing high as the first resistance for the dollar index is an appropriate level for the 4-hour time frame. And of course, then we'll take the first resistance and switch this to a second resistance for the 4-hour time frame. All right. Now let's see if we can use any Fibonacci levels as well. Right, I think we can do a nice Fibonacci projection as well, starting with this swing high here on 25th of August down to 30th of August, and we'll end up at the swing high here on 3rd of September. Let's see what projection levels it gives us and what can we use. All right, okay. Okay, 68 is here, 61.8% is here, 78.6% is here. Well, they're a little bit too far from where price is currently trading. But should these levels be broken, then I think the 78.6% Fibonacci projection level lines up well with this overlap here at 103.05 as well. So that's something to take note of should price break through these support levels. But as of now, these projection levels are too far, simply just too far off in the current context. All right, hi Zub, great you can join us. Let's see if we can use a Fibonacci retracement instead, starting with this swing low from 30th of August, going up to the swing high on 1st of September. Right, we can see the 23.6% and the 50% retracement levels line up very well with the overlaps that we had described earlier, or we had identified earlier. So let's just keep 23 and 50. Right, so not only do we have a strong overlap levels for the first support and second support, we also have a contributing factor, which is the respective retracement levels, right? The respective Fibonacci retracement levels at 23.6% and 50%, adding to the significance of these overlaps. All right. Okay. To the upside, we've got the second resistance, which also has the 127.2% Fibonacci extension. Right, that's great. Okay, I think I'm just going to move my adjust my camera as well. Webcam, I had to keep it a little bit in the middle because of the disclaimer and the logo at the start, but I think I can keep this right here in the corner now so we get a clearer view of um, the chart. All right, okay, that's better now. Okay, so right, okay, so here we are on the dollar index for our time frame. So we can see price dropping as low as 104 today, but it seems at the recent candle on the 4-hour candle, it seems to be uh, climbing back higher or found some support. It seems to have not support, but I would say it's somewhat stabilized here at about 104. Alright, so do take note of the support levels and resistance levels for the dollar index on the 4-hour time frame, and also we can see that price is currently still trading within the bullish channel. All right, okay. Next we'll move on to euro, right? And of course, if you have any requests for any currency pairs or commodities or even indices, please drop your questions in the live chat box early so I can get to them as soon as possible, right? You don't have to leave it till the end of the webinar or halfway through the webinar. As soon as you uh, think you want to have an analysis on any currency pair, just drop your question in the chat box and I'll be happy to go through it with you. Alright, okay, so as you can see for the euro, right, let's just start off with the daily time frame again. Right, so these were the levels that were identified on the daily time frame. So as you can see, there's a very nice ascending trend line where price has bounced off this level this morning and the euro is climbing up higher. All right, Samuel. Okay, so gold, US 30 and pound, Kiwi as well. Okay, great. All right, so after euro, I'll go into gold, US 30 and pound, Kiwi as well. Okay, and then of course we can come back to the majors and come back to anything else as well. Okay. All right, so since we're on the euro, we can see there's a nice overlap pullback support here at 1.0767, and we also see a nice ascending trend line. So price has really respected this support level here and is starting to climb higher today. Now let's see where are the more actionable levels. So let's zoom in onto the 4-hour time frame. Okay, so what was identified as a intermediate support on a daily time frame can definitely be used as the first support. I think this is a pretty good first support, and we see a very nice strong pullback level here. Probably a little bit, yeah. So first support on the 4-hour time frame would be 1.0771. If we pull back a little bit further, then I can argue as well that there is a little pullback, one more pullback here as well. Okay, and we also have the ascending trend line, so that's fine. First support, we can get rid of this second support label. What about the actual second support? If we see, I think for the second support, we can probably, let's see if we can use the Fibonacci extension to help us identify a level as well. Let's use 127 and 161. Right. No, I think we can use this pullback level here or this overlap here and 1.0740 to identify as the second support level. Right. Let's just use that because we see price reacting off this level a couple of times back in 7th of June as well as on 12th of June. Okay, we don't need the 127, that's simply too fast, we'll get rid of that. And yes, of course, and we can also see that. Sorry, I missed out on this. The first support, uh, the pullback and the first support also lines up pretty well with the 78.6% Fibonacci retracement level as that we see here. So just let me make it more clearer. So just label it according more accurately on the 4-hour time frame. So you can see that this overlap level at 1.0773 is a nice pullback level. Sorry, it's a nice pullback level and also aligns with the 78.6% Fibonacci retracement level. All right. Okay. Zab has a question. Right. Inflation is still high in the US. Yes, historically it's still high. It's been trending lower, but the recent PCE and CPI readings for the month of July has ticked higher. So it is likely that the Fed going to September's meeting, they may still continue to raise rates. Uh, so that would obviously be bullish for the US dollar, but of course nothing goes up or down in a straight line, so there can be pullbacks along the way. So if we just look at the dollar index, as we say, is still in a bullish channel, right? It's quite likely price could pull back before resuming higher, before reversing to resume the uptrend, right? So do take note. Yes, inflation is still at historically high levels, and after decreasing quite steadily over the last few months, but July's readings have shown an uptick. This could raise some concerns at the Fed, and they may raise rates in September as well, and markets may be pricing this in as we get closer to the date. All right. So okay, back to euro. Okay, second support is fine. First support also lines up 78.6. Okay, what about something more actionable on the first resistance level? Okay, I do see. Okay, welcome, Zap. Okay, I'm going to move this first resistance here that was identified on the daily time frame. I do see a nice pullback level here. And if we were to stretch it back as far as here, so basically 1.0837 is a more actionable first resistance level. As we can see, price bouncing off this level 3 times, like finding support here. So 3 pullback swings, so 3 significant swings here that took place in 23rd of June, 30th of June, and 6th July. And after that, after price broke through up and down, it found support again on 31st of August. So this is a level where price has reacted off multiple times. So hence we can use this as the first resistance on the 4-hour time frame. Okay, what about the second resistance? We don't see anything, any other major overlaps. So I think we can use this pullback level here. This would be about 30 pips, or maybe a bit too close. I think we can use this as a potential resistance, second resistance here. Right. Okay. We don't really see any other overlaps. Let's see if there's any Fibonacci levels that we can use to help us identify a better level perhaps. Okay, no, I think this pullback level here at 1.0882 is pretty decent to identify as a second resistance level, and it also lines up well with the 61.8% Fibonacci retracement. So let's just keep that. What do we have here? This is what is this? This is okay, this is a Fibonacci extension level, but I wouldn't take it from there. I would probably take it from here. If I wanted to, no, I think we get rid of this level. That's fine. Okay, so for the euro 4-hour time frame, these are the more actionable support and uh, resistance levels. And should dollar index continue to pull back towards where the first support level is, we can also of course expect euro to at least break above 1.08 today. All right. Okay. So we had a request for gold. So let's just go into gold. So naturally, we know gold and dollar index, they are negatively correlated. So if dollar index has been falling earlier this morning, you can expect gold prices to be climbing higher, right? Which is what we saw for today, earlier today. But As you can see, over the last two candles on the 4-hour candles, price has really run into this major resistance zone here and is starting to pull back. Right, to truly appreciate this resistance zone, let's just go into the daily time frame first, so we can truly appreciate it and see how much of a significant resistance zone it actually is. All right. Okay, so um, right. Okay, so if you look on the daily time frame, we see a pretty strong descending trend line as well. We also see an overlap level at 1945.30. We've also done a Fibonacci retracement. Let me zoom in. We've also done a Fibonacci retracement on this part of the move, starting on swing high of 20th of July, ending with a swing low on 17th of August. And we can see that the 61.8% Fibonacci retracement level lines up pretty well with the first resistance as well, right? I mean, with the overlap level at 1945. So you have the combination of three factors contributing to a very strong resistance zone, right? Which is also naturally will be applicable for the 4-hour time frame because price is currently trading very close to it. So we have the descending trend line, the overlap level at 1945.31 plus the 61.8% Fibonacci retracement level as well. We also have the 61.8% Fibonacci projection level. So this projection level started from this swing low here on 29th of June, going up to the swing high here on 20th of July and ending with the swing low on 17th of August. And the projected level, the projection level comes in at about 1943. Right, so we have a lot of factors that are contributing to this significant resistance zone for gold. All right, so naturally now that we know how much of a significance this level is, let's zoom in onto the 4-hour time frame. So I think, okay, with regards to first resistance, I think no issues there. We can keep the first resistance that was identified on the daily time frame and we can reuse it for the 4-hour time frame. Now, what about something for second resistance for the 4-hour time frame? If we see there's a nice overlap level here as well. You can see price bounce making a swing here on 24th of July to bounce higher. Another swing here on 31st of July and bounce higher, then ran into resistance on 22nd of August and came pretty close to this level on 1st September last Friday as well. So I think we can use this level, which is at 1954, and identify it as the second resistance. And naturally, this one up here will get rid of that. Okay, what about on the support side? Where are the more actionable levels that we could perhaps use? Right, we can also use the Fibonacci retracement level. Let's start with the swing low here on 21st of August, going up to the swing high on 1st of September. Right, let's pull up all the fibs and let's see if they line up with any strong overlap levels as well. Right, okay, I think we can use the level at 23.6%. You could argue that price ran into a little bit of resistance here. There's a bit of consolidation before price broke higher. Then on Friday as well, when price dropped, it did find support at this level before bouncing to go higher. Right, so we can use this level here at 1936.99 as our first support for gold. In terms of the second support, let's see any other. Yeah, we do see a pretty decent overlap level that sits underneath the 38.2% Fibonacci retracement levels. If I look here at 1924, we do see a nice overlap level, so we can use that as the second support. And I would like to highlight this zone as well, and we can see here. Yeah, okay, so with that we're just going to keep 23 and 38.2% retracement levels, and we can get rid of the rest. Tidy up the chart. We can also get rid of this green zone here that was identified for the daily time frame. We don't need that now. And get rid of the first support as well. Okay, so here we are on gold. Now, should price break through this first support here? Actually, this I would probably like to uh, highlight this or identify this as an intermediate support rather than as a first support, because it is quite a weak pullback level, and instead I'll highlight this as the first major support. Okay, so because we have the intermediate support at 1936.99, and we have the first support at 1924.78, there's no need to identify a second support for now. I think these two support levels should be more than sufficient on the 4-hour time frame. All right, okay, so this is for gold. As we just briefly noticed earlier, dollar index sort of stabilized at about 104.10. Now, should it continue to go higher, then we could see this pullback in gold prices continue to extend. All right, sure, Kathy. I'll come to pound dollar as well. Yeah, that's perfect. Because after gold, I'll do pound dollar, then pound kiwi, and then we can go on to US 30. All right. Okay. Speaking of US 30, because since it's an index, do take note. It's Labor Day in US today. Right, 4th of September is Labor Day, so it's a bank holiday. So the stock and bond markets are closed. So we can definitely expect lower trading volume in general today. Right, so once Europe has already come online, and in a couple of hours, where usually higher trading volume comes in, I think we're not going to see that today, as the US is having a bank holiday where the stock and bond markets are closed due to labor markets. So do take note of that. Trading volume could be relatively light today as compared to other days, right? So do take note of that. So stock markets, bond markets are not going to open, but of course futures are currently trading. All right. Okay. So let's go on to pound dollar, and then we'll do pound, what's it, pound kiwi, and then US 30. And of course, any other request that you may have. All right, as usual, let's just once more start off on the daily time frame, so to get some perspective on how this pair has been trading. All right, so roughly I would say since what is start of August, right, and July, start of August, pound has been somewhat ranging between approximately between 1.2554 and 1.2787, right? We can see it sort of range roughly between these two levels, right? So this is where we've identified something as a downside confirmation. What do we mean by downside confirmation? This is, as we mentioned, pound was trading sideways. So should it break below this level, then that signals a potential bearish trigger for it to drop towards 12500 and beyond. Right, so that's what we mean by downside confirmation on the daily time frame. But as we can see, dollar index is actually selling off today, so that's causing of course giving some support to pound dollar and the euro as well. Okay, so this intermediate resistance here, so price is currently testing this intermediate resistance, which is on the daily time frame. As you can see, a nice overlap at this level is at 1.2629. We see a nice overlap here, price making a significant swing here on 8th of May, another significant swing here on 27th of 28th of June, and finding bouncing off this level here on 3rd August as well as 14th of August, right? Okay, so let's switch over to the 4-hour time frame. So because of that, right, I think of course no changes to the intermediate resistance. I think we can keep that at 1.2629. This is very applicable for the 4-hour time frame as well. This first resistance here at 1.2787 is just simply too far. So let's see where would be a more actionable level. I think perhaps at this pullback, there's no really other good level that we have. Let me see if I can do a Fibonacci retracement here. This is a relatively small move, but let's see if we can get anything else. Probably, okay, I think I'll keep 38 and 61. Right, okay. So we can see the intermediate resistance at 1.2629 line up slightly below the 38.2% Fibonacci retracement level, which is pretty decent as well, because we can see price bouncing off here or close to this level on 3rd of August as well as on 14th of August. So it does offer what was previously a support would now potentially act as resistance. So I think this level here is a good level to highlight as well as a zone, resistance zone. Right, so we have an intermediate resistance zone For the pound, first resistance I think at 1.2692 is fine, which is a recent pullback that took place on 1st September, which lies just above the 61.8% Fibonacci retracement as well. Alright, so that's the first resistance. And if I was going to do a second resistance, it would probably, yeah, this swing high here at that took place on 30th of August should be more than should be a pretty decent level, because you can see price making a pretty significant swing here, right? Going up here, hitting 1.2748 and then coming down as low as 1.2580. So this is a pretty significant swing high that took place on the 30th of August. So I think that's a good enough level to identify as the second resistance. All right, what about first support? So what was identified as the downside confirmation on a daily time frame? Naturally, we can use this as our first support, right? I think let's see if we were to fine tune it a little bit here. Yeah, since we're on a 4-hour time frame, we can fine tune it a little bit. You can see price making a significant swing here on 2nd of June, and finding a little bit of support, pullback support here on 9th of June, and then of course finding making another swing here, swing low here on 25th of August. Right, so I think this first support is a good level to identify. All right, what about the second support? Okay, then naturally we don't need this down here. Okay, I think the second support, we do see price making another significant swing here on 12th of June. Let's see if that lines up with anything else. I think we can try and use a Fibonacci extension, perhaps starting from the swing low on 25th of August, going up to the swing high on 30th August. Let's pull up 127 and 161. Let's see if they line up. Yes, so 127% Fibonacci extension lines up well with this pullback here. So we've got the Fibonacci extension acting as a secondary factor in identifying this second support as a pretty significant level. All right, so we're going to get rid of 161, just keep 127, and let's just adjust the labeling so it's a bit more clearer. All right, okay, so second support, which is at 1.2494, is identified through this significant swing bounce that took place on 12th of June, as well as the 127% Fibonacci extension level that was identified from this swing low here, 25th of August, going up to the swing high on 30th of August. All right, so this is what we have for the pound. So do take note, these are the more actionable levels for the pound on the 4-hour time frame. All right, no worries, Kathy, welcome. All right, then naturally we'll go over to pound Kiwi. All right, this is a cross pair. I generally don't look at the crosses so much, especially this pound Kiwi, but let's go through the analysis together. Anyways, it's always good to uh, look at something new. All right, here we are. All right, so this is the chart for pound Kiwi. Right, and then after that we'll do US 30. Okay, let's just go on to the daily time frame to just truly appreciate how this pair has been trading. Okay, let me get rid of any past wow, okay, so yeah, so as you can see, this is probably at all-time highs, pretty much at all-time highs. The last time this happened, I'm not sure why this spike occurred on 9th of March. Okay, 9th of March 2020, probably COVID related. Might not see this spike across all brokers or all price feeds, so do take note of that. Could be an anomaly. But otherwise, okay, it is not at all-time highs, but you can see pound Kiwi was back 8 years ago when it really hit about £2 45 cents. Yeah, okay. Oh, it's a $2. Yeah. Right. So okay, so it is making 52-week highs, and we can also see very strong uptrend. But now we can see price is currently pulling back. If we were to see, I can probably see a descending trend line as well. Right. Let's just identify this descending trend line. For now, it's a pretty weak trend line for now, because we only see price testing it once here. Let's see if it really holds up and acts as a resistance. What else can we do? We can also try and see. Fibonacci retracement, I think starting from this swing low here, going up to this swing high. Right. Okay, we can see 38.2% lines up pretty well with where price has bounced off this level several times. So I think this is where we can identify the first support level. Although this is a daily time frame, I believe this should be a very good level for the 4-hour time frame as well. So let's just set this as our first support. There's no other major overlaps that we can reference. Right, so let's just keep this as the first support. Okay, now that we've seen how price has been trading, we can we can see that it's been in a downtrend since 21st of August. Price is making lower highs, lower lows. So it's quite likely if pound kiwi continues to rise up, it may find resistance at about 2.13 once more and perhaps resume the downtrend. Alright, okay, now let's zoom into the 4-hour time frame and find something more actionable in terms of the second support and perhaps even the uh, first resistance. Okay, now that we zoom in on the 4-hour time frame, we can see this level here, which is 2.11. You can see pullbacks that occurred 3 times here back in early August or mid-August, and then finding support again towards the end of August. Although price did break through this level quite strongly, I think we can still sort of use this as a first support level. Alright, what about the second support? Let's see. Okay, I think we try and do a Fibonacci projection from here. Right, 61% is here. Does it line up? No, we don't see any other major level. Don't see any other overlap. Okay, so I think I'll just keep 61.8% as a guide. But I think in terms of the second support, I'll just take it as the swing low that took place here on 1st September, right? Okay, so we don't really have any other major overlap levels to work with. So I think we're just going to keep use the swing low in the identification of the second support. And of course, with regards to Fibonacci, we'll just keep 38% here. Right, okay, what about resistance? Okay, we can see a pretty decent pullback level here at 2.12, right? Price making a significant swing high here on 1st September and also running into resistance today as well. So I think we can use this level at 2.12 in the identification of the first resistance. I think that's fine. And what about second resistance? Let's do a Fibonacci retracement here. I think probably, no, I don't see, the price structure is not very good. So when you have price structure which is a bit messy like this, it's hard to find significant overlap resistance or support levels, so that might make things a little bit more difficult. So sometimes we can try and use Fibonacci retracements or projections to help uh, guide us a little bit, but I don't really see any other major overlap levels. Perhaps if I were to just really force something out, maybe this price level at 2.13 probably could act as a potential second resistance, right? Now let's just label this as second resistance, and we'll just keep 31, 61 and 50%, right? Okay, so you can see the first resistance is a pullback level at 2.12, which lines up quite close to the 50% Fibonacci retracement level. And we see this level here at 2.13 as a pretty decent pullback or overlap level as well. Price structure isn't that great, so in terms of finding a major significant overlap resistance, but I think this is what is pretty actionable on the 4-hour time frame for now. So do take note of these levels for the pound kiwi. All right, now let's go on to US 30, which is the Dow Jones Index. So on my trading view platform, we have it as DJ30, right? So it's still going to show you the same Oh wait, hang on. That was okay. Yeah, same price value. Right. So let's just go on to the daily time frame again. All right. So right. So Dow Jones made a high back on was it? Yes, a 2023 high on 27th of July, and it's been trending lower since. But did make a significant swing low here on 25th of August to bounce higher. So we could see equity markets continue to pull higher this week. So let's see. We do see uh, descending trend line as well. I do see a pretty decent descending trend line. Price does seem to have broken out of it last week, finding support today as well to climb higher. So it's quite likely we may see uh, Dow Jones push higher. So the first resistance that's identified on the daily time frame should be very applicable for the 4-hour time frame as well. We can see this is at roughly at 35,000. See a nice overlap level here. Second resistance is the swing high. First support is here at 34,280. Okay, let's zoom in into the 4-hour time frame and try and find more actionable levels perhaps on the support side, because this first support at 34,281 is perhaps a little too far from where price is currently trading. All right, okay. I do see a pretty decent pullback level here at 34,750. If I zoom out a little bit, no, I think this we can use this level in identification of an intermediate support. Right, it's not the strongest level, but I think it is going to act as a pretty decent intermediate support level. So 34,723 is a intermediate support level. This descending trend line, since price has broken through it, I'm going to change it into green. Right, so we do have a little bit of support zone here for the Dow Jones. Now, what about the first major support? Where can we do that? We find it. Okay, let's use a Fibonacci retracement starting from the swing low 25th of August, going up to the swing high here on 31st of August. Let's pull up all the fibs. What do we see? Okay, we see 38.2% lined up pretty well with the intermediate support, so that's great. What about anything else? Any other major overlaps that we can try and identify? Probably no, there's no real. This level here at 34,586 does look pretty decent, but we do see price cutting through this level quite a few times. I think probably what might be a slightly better support level, maybe this pullback here, where we see a little bit less of price breaking through the level, and we can label this second support. Okay, let me just tidy up things a bit, get rid of this. What's this here? This is oh yes, okay, so I'm just going to keep 38 and 61%, tidy that up. Right, okay, so first support, I think this is a very pretty clean level to identify. Right, which is a nice pullback level at 34,723, which also aligns quite perfectly with the 38.2% Fibonacci retracement level. So we can use that as an intermediate support level. I think not even intermediate. I think this is probably good enough to be a first support level as well. Where you can see price finding support here, then running into resistance, and then finding support as well. So this does look like to be a pretty significant overlap level. So let's just identify it as the first support. Second support, I think, is a little bit harder to uh, find the level, but I think perhaps it's not the cleanest level because price broke through here. I think probably this pullback level here that occurred on 24th of August and then seeing a slight pullback here on 28th of August. I think this level at 34,425 that aligns just under the 61.8% Fibonacci retracement level should be a pretty decent level to identify as the second support. All right. Okay. So this is Dow Jones. Right. Okay. So just to recap, price has broken out of, okay, it doesn't look very good on the 4-hour time frame, right? If we look on the daily time frame, this actually looks to be like a pretty decent level where price is broken out. But if you look on the 4-hour time frame, actually it's, yeah, actually you could argue it's actually still not technically broken out yet. Yeah, so if I take it from the swing high here, no, yes, if you look on, if you, yeah, see, that's the thing, sometimes what looks good on a 4-hour time frame maybe won't be so clean or clear on a lower time frame. So I think it's good to consistently adjust and check. Yeah, so I think perhaps, yeah, although price is making lower lows, lower highs and lower lows, it's not actually, and it's bounced quite strongly since 25th of August. It's not actually broken through this level here, or broken through the descending trend line. So yeah, I think it could still make a push towards the first resistance, but I think we can find uh yeah, a lot of we could see price stall around this level, which should be at about 35,000. All right. Okay, so this is Dow Jones 30. All right, let's take a look at oil as well, another commodity, and of course we should have time for another one or two more requests, so do send them in now so we can quickly go through it together. Right, okay, so this is WTI oil. So oil has bounced quite strongly. Just quickly look on a weekly time frame. We just zoom in. Since 26th of June, so pretty much the whole of August, oil has been in a strong bullish downtrend, uptrend, and then except towards the second half of August, 14th of August and 21st of August, we saw 2 weeks of decline. Now this, now in hindsight, looks to be like a pullback. And last week, of course, we saw a strong bounce in crude oil prices once more. So the oil does seem to be in a very strong bullish uptrend. And not only that, it broke what was this level at 82.72. This was previously a very significant overlap resistance. Price has broken through this last week, and it's quite likely that we may find pullback support around $84 per barrel before the uptrend is likely to continue. All right, so this is what we see on the weekly time frame. Right, this is daily. So let's just zoom in into the 4-hour time frame now and find something more actionable. Okay, it's this. Anything else? No, no major other overlaps. Okay, right. I think first support is fine. Oh, okay. This is daily time frame. Perhaps, right. I think I would use this level here, which is at 84.51, as the first support on the 4-hour time frame. As you can see, with this wick here and price coming up pretty close here as well, this level acted as resistance, which has now broken through last week. So now this should act as a pretty significant pullback support for crude oil prices. Second support is a little bit far, but I think second support maybe this level here. And if I use the wick of this candle of this swing high here on 1st December last year, and then this swing high on 12th April, as well as this little pullback resistance here on 11th August, I think this is a pretty decent second support to identify for WTI oil. So second support is at 83.26 and first support is at 84.51. We'll just get rid of this zone. This zone is for the daily time frame, but we don't need it on a 4-hour time frame. All right. Now, what about the first resistance? Where can we potentially find this? It's a little bit hard. Okay, before we do that, let's see if there's any Fibonacci retracement levels to probably help us add significance to the first or second support. Not really. None of the Fibonacci levels really line up with the support level that we had identified earlier, so let's get rid of that. Okay, second resistance is good. It's a little bit harder to identify on the 4-hour time frame. Yeah, there's no real major overlap levels unless I try and use this significant swing here. We do see a pretty decent significant swing here take place at 86.90. Right, so let's just see where this actually is. Yeah, still a little bit far from where price is currently trading, but I think this would be a more uh, relatable level, something that's a little bit closer to where price is currently trading. Let's just keep this here as the second resistance, and of course we'll get rid of this, which was identified for the daily time frame. Alright, of course we'll just keep this is a 61.8% Fibonacci projection level. Right, because yeah, to the upside there's no other major real overlaps that we can use. This swing back or the swing high here, this pullback here does seem to be a pretty decent level, so we can use that as for now in the identification of the first resistance for WTI oil on the 4-hour time frame. Alright, and just for those who are trying to figure out how did we get this projection level, we use the Fibonacci projection tool starting with this swing low here on 28th of June, going up to the swing high here on 10th of August, and ending with the swing low here on 24th of August. And that's how we got the 61.8% projection level, which is helping us to identify the second resistance on the 4-hour time frame. Alright, okay. Right, we're coming close to the end of the session. Right, I do have time for another one or two more analysis. So if you have any requests, please send them in now, and I'll be more than happy to look through the currency pair or commodity or even indices with you guys. Anything else, guys? Is there anything else you would like me to look through together with you? Explain your Fibonacci. Okay, hi Carraro. Okay, what do you mean by explain your Fibonacci? That's a very vague question. Are you asking about how do I use the Fibonacci retracements tool, or how do I use the Fibonacci projection? Could you just elaborate a little bit more on your question, and I'll be happy to uh, clarify your doubts if you have any. Okay, great. Okay, right. Okay, so we'll just do right. If you go to Trading View here, right, you have the Fibonacci retracement tool up here with this symbol, and you have the trend-based Fibonacci extension tool. All right. Now for Fibonacci retracements, obviously we're going to use this retracement tool, and do take note for Fibonacci retracements. It always starts from left to right. So if you're doing a Fibonacci retracement on an uptrend, you would start on from the bottom left and you'll end up on the top right. Similarly, if you're doing the Fibonacci retracement on a downtrend, you will start from the top left and end on the bottom right. So always remember, it's always a left to right movement. Uh, for an uptrend, it will be bottom left to top right, and for the downtrend, it will be top left, bottom right. So for example, in this uptrend here, I will find this the absolute swing low for this uptrend, which is took place on 24th of August, and then I will look for the absolute swing high for this uptrend, which now took place earlier this morning, right? So when I pull up all the Fibonacci levels, right? So this is how you would draw it on an uptrend. Do take note. I started from this swing low here on what is this? 24th of August, and I ended with a swing high here on 3rd of this is 1st September, right? Okay, so now once you have drawn the Fibonacci retracement, all these levels that come up, these are the main Fibonacci retracement levels. So 23.6%, 38%, 50, 61, and 78.6. So these levels, should price continue to pull back, these levels would then potentially act as or help us identify uh, key support level. So if price does continue, let's just imagine price is currently pulling back as we speak, right? It is dropping down towards 84.50. So potentially these Fibonacci retracement levels would potentially act as identifying significant support levels. But do take note, we do not use, at least for us here, we do not use Fibonacci retracements in isolations. We also like to see them line up pretty well with a major overlap support or major overlap resistance. So that acts as a contributing factor in the identification of that level. But in this case, just you can just as simply put it that when you do a Fibonacci retracement on an uptrend like this, the subsequent levels are helping us to identify potential support levels. Now, similarly, if you were to do it on this downtrend here, okay, so just let me tidy up all this. Right, so if I were to do it on this downtrend here, so we're looking for starting from this swing high here on 10th of August, so top left, going down to this swing low here on 16th of August. So another thing I want to mention is that the trend line should try and capture the price structure or the market structure as closely as possible. There may be times, of course, where the price structure may be deviating away from the trend line, but in this example, you can see the trend line is has captured the price structure or the market structure relatively well. So now all these retracement levels from 23 to 78.6, these would potentially be acting as resistance levels. So we can see as price pulled back to go higher, it broke through the 23.6% pretty easily. It even broke through the 38% pretty easily. Where it found major resistance was at the 50% 50% retracement level, where it made a pretty significant high and dropped lower. So this is how we can use the Fibonacci retracement tool. All right, Bob, I missed my yes, we do have the go-to webinars. Yeah, there should be a session tomorrow, I believe. There should be a session tomorrow. Do check on the calendar. Yeah, I believe there should be a go-to webinar by for IC markets tomorrow as well. Right? Do keep an eye out. We still have been running them. Yeah, so just check with IC markets directly. All right. All right. Okay. So I've come to the end of today's analysis. So just take note of the key page blank. Okay. Can you try looking at IC markets global rather than IC markets Australia? Because they've migrated a lot of the content, or rather the new content is now coming up mostly on the IC markets global page. So for example, here right now, if you look at my page, I'm on YouTube and this is IC Markets Global. So the channel you want to be on is IC Markets Global, because that's where a lot of the videos and webinars are now being posted onto. Right? Maybe perhaps that's why the page is blank for now. Right, Bob? I think you can try to look for that. If you are referring to past webinars, right? Past webinars now would also most likely be uploaded onto IC Markets Global. So they've pretty much migrated everything from the Australian channel into the global channel. All right, just let me see if I can find anything for you and check on my end here on GoToWebinar for IC Markets. Just give me a second while I check it out for you. All right, okay, yes, there is a class coming up tomorrow, which should be at what is this now? This would be 9:30 a.m. GMT, so it's a MACD masterclass. Okay, there is a GoToWebinar by IC Markets tomorrow at 9:30 a.m. GMT. So it's a MACD masterclass. All right. Okay. That's coming up tomorrow. And let me head back to the dashboard again and check. And also this is a Bahasa webinar, and anything else. Right, and then you have the other various languages as well. So there'll be a Spanish webinar, no, Portuguese webinar on 6th September. There's a Bahasa webinar on 6th September as well. But for the English one, the most recent one, the one that's coming up next will be MACD Masterclass 9:30 a.m. GMT tomorrow, 5th September. And if I see anything else, yes, 12th September again, we have an English webinar on price action masterclass. Yep, they're still there. They're still coming up. Could I post the link? Okay, what I have is just a dashboard that gives me the schedule of uh of the webinar series that are coming up. Perhaps you could contact IC Markets directly. I believe they'll be able to give you the relevant link. All right, Bob, would that be all right? All right, okay. So if that's the case, then all right, okay. Do take note of the key economic events coming up this week. RBA tomorrow at 4:30 a.m. GMT, followed by Bank of Canada at 2 p.m. GMT on September 6th, and of course all the other uh, unemployment claims will be very market moving as well at 12:30 p.m. GMT 7th September. All right. Do take note of uh, the levels that we've seen today on a 4-hour time frame. And if you want something that's a little bit with a higher time analysis on a daily time frame, you can check out this video here again. And yeah, do take note of the data that's coming up this week. And okay, before we end, just have to go through the final disclaimer. All right. And all right, thanks everyone for tuning in. It's been a great session. I hope you guys enjoyed this session, and I'll catch you guys soon in the next one. All right. Just to wrap up with the ending disclaimer, so do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risks involved and seek independent advice if necessary. All right, guys, thank you, and thanks everyone for tuning in. I hope this has been useful for you guys. And yep, do look out for the MACD masterclass tomorrow. And yeah, good luck trading and wish you guys all the best. All right, thank you.